Good morning, this is Monday the 9th of September. I'm Grady Wolf, market analyst with Bell Direct. Wall Street closed lower across the board on Friday as investors assessed the August jobs report, which was released on Friday morning. The S&P 500 fell 1.73% to post its worst week since 2023, with a 4.3% decline over the 5 trading days, while the Nasdaq tumbled 2.55% and the Dow Jones ended the day down 1.01% on Friday. The jobs data out for August on Friday indicated non-farm payrolls rose by 142,000 compared to economists' expectations of 161,000 in August, but the unemployment rate fell to 4.2%, painting a mixed picture about the strength of the US job market. Investors took the weaker than expected reading for non-farm payrolls as a signal of economic weakness and as a result sold out of equities on Friday. Over in Europe, markets closed Friday's session lower in the worst week since the early August slump as the US jobs report clouded investor sentiment around global economic stability. The Stoxx 600 fell 1.15%, Germany's DAX lost 1.48%, the French CAC fell 1.07%, and in the UK, the FTSE 100 ended Friday's session down 0.73%. Across the Asia region on Friday, the sea of red mostly extended across the region as key economic data weighed on investor sentiment, including Japan's household spending data for July, rising just 0.1% compared to the previous year, and that was compared to 1.2% rise economists were expecting. Japan's Nikkei fell 0.72% on Friday, South Korea's Kospi index lost 1.21%, and China's CSI index ended the day down 0.81%. Locally on Friday, the ASX 200 rose 0.4%, with the bankers driving the positive close to offset some of the heavy losses experienced this last week. Energy stocks tumbled over 3% on Friday, extending on the week's losses amid the volatile price of oil currently, while consumer discretionary stocks rallied 1% in the final trading session of last week. Material stocks came under pressure on Friday after China's Steel Advisory Group advised mills to be cautious about boosting outlook on fears of subdued demand and subdued pricing, therefore impacting the iron ore prices late last week, and the local miners were sold off as a result. Strike Energy soared almost 9% on Friday in the days after the gas exploration and development company released plans to expand the eastern Perth Basin with major discoveries at its Erregulla Deep 1 exploration well. On the commodities front this morning, oil is trading 0.8% higher at $68.20 a barrel. Gold is up 0.41% at $2,497 an ounce, and iron ore is up 0.34% at $91.61 a ton. One Aussie dollar is buying 66.67 US cents, 50.79 British pence, 94.86 Japanese yen, and 1 New Zealand dollar and 8 cents. And now let's dive into some trading ideas. Ahead of the first trading session of the new trading week, the SPI futures are expecting the ASX to open the day down 1.28% following the Wall Street slide last week. And now let's dive into a trading idea for your consideration today. Bell Potter's increased the 12-month price target on GrainCorp from $9.90 to $10.20 and maintain a buy rating on the company following the release of the ABARE September 2024 East Coast winter crop forecast, reflecting a 6% upgrade relative to the record June 2024 estimate of 28.8 million tonnes. The consensus EBITDA FY25 expectations for GrainCorp of $320 million imply an outcome consistent with GNC's through-the-cycle EBITDA projection, which appear conservative, especially if the basis trade emerges over harvest, which Bell Potter would expect to occur in the winter crop of this magnitude. And that's all for this Monday morning. Have a wonderful day and happy investing.